What if a $5,000 investment in a small startup could one day become $25 million? That actually happened to early investors in Uber. A tiny risk turned into a life-changing return. And similarly, some seed-stage investors of Airbnb saw a return of up to 499,900% by the time of the IPO. Still, the reality is far from brutal. About 75% of VC-backed startups never return cash to investors. So, how do a few early investors change their financial lives while most lose money? If you want the answer, this video is where your journey begins. Welcome to Exit Fund, where we help you understand how smart startup investing really works. Most people think it's only for billionaires. But the truth is, with the right knowledge, anyone can learn the skills professional investors use when they say yes or no to a startup deal. And that's why we created our startup investing course. It gives you a step-by-step guide to find high-potential startups early and think like a real investor from day one. You'll find the course link for Learn How to Invest in the description. And you can check it out while watching this video. Meanwhile, let's break down the exact playbook beginners can use to start investing. From judging founders to checking market size and picking the right valuation. Most beginners think startup investing is about finding a magic startup and getting lucky. But the real game is very different. Over the long run, around 90% of startups fail. And even among venture-backed companies, roughly 3 out of 4 never return cash to investors. That sounds scary. Yet, this is the same world, where one smart early decision on the right company can completely change someone's financial life. When Facebook was still just a college social network, Peter Thiel believed in it and invested $500,000. Later, when the company went public, that small stake returned over $1 billion to Thiel. Similarly, when Google was just a search project, Andy Bechtolheim wrote a $100,000 check, and that single bet later became worth more than $1 billion. And when Sequoia Capital invested a few million into WhatsApp, long before its acquisition by Facebook, that early stake later boomed to roughly $3 billion. These stories remind us that what looks like a tiny bet today can become life-changing if the tiny company becomes a giant. So, the question is not how do I copy these exact wins, but how do I even start smartly in a world where most startups fail? But one breakout success can turn the odds in your favor. The first step is changing how you think. Startup investing isn't about finding one perfect company. It's about building a bunch of small bets. Some will fail, some will do okay, and one strong winner can cover every loss and still give you a big return. The next step is looking at people before ideas. Even the best ideas change over time, but great founders keep moving forward. They listen, they try again, and they fix things fast. So when you see a startup, look at the founders first. Then, learn to check a few simple numbers. Is the marketing big enough? Is the company solving a real problem people actually care about? Are users already showing interest? And is the price you're paying fair for how early the startup still is? Finally, learn before you invest real money. Study pitch decks, do basic due diligence, join investor groups, and watch founder calls right from your laptop. Look at many startups and talk to other investors so your first check comes from knowledge, not luck. If this feels exciting but unfamiliar, that's why the Exit Fund Startup Investing course exists. To help you learn the smart way from the start. It shows you how to think like a real investor, spot strong founders, find big markets, get in at the right price, and build a portfolio where even one success can change everything. The goal isn't to make you a finance expert. The goal is to give you a repeatable process. So when you write your first check, you think like a real early stage investor, not someone just following hype. Because your investment journey shouldn't start with which company should I invest in. It should start with how do I spot a unicorn before the world sees it? That's the skill this course trains you to build, so you can be in the right company at the right time. If you found this helpful, make sure you like the video, share it, and subscribe to Exit Fund for more startup investing insights.